caller from Philadelphia, one of our favorite people, Mr. Z. John, how are you there? How you doing?
Hearing from Norm. Larry, I've got a question here. I wanted to ask if you could pull up and gaze at a picture that I posted in Tiger TV, the Tiger's Den.
Yes.
I admire so much in your ability to ignore the news and trade the patterns alone.
Yeah, I try.
A great example of that was shorting the Canadian dollar on Monday up at 130, wherever that was, and you've got a fabulous gain on that. So here's my question. If you could gaze at the chart I posted on Tiger TV, and you will see just a price pattern with price bars and fib retracement levels in it. And I'm not even going to mention what this is, but we can both observe that this price pattern has rallied off lows and has gotten up to multiple highs at 325-ish, which is an exact fib 618 retracement. My question, Larry, if you look at this chart, when you look at that pattern, do you buy it? Do you sell it? Do you do nothing, given that pattern, please? That's the question.
The answer is yes, yes, and no. John, let's just walk through it. You've got a beautiful head and shoulders pattern. It's a 50% retracement on the right shoulder. You're going back up against a 61% retracement. You cannot be short above 33. Above 33, you have to be long because the ABC structure on that takes you all the way up to 39. So it's a bullish chart. I'd rather be long than short. That's what I'm seeing, but that is a very, very bullish chart. We had a Gartley there at the 26.5 level. That was right at a 50% retracement, and it's already above the 78% retracement of the last swings by far. So if you wanted to short it here, your risk is at 32.75, and above 32.75, you don't want to be short. That's what it looks like from the cheap seats here in Tucson.
Yeah, no, that's terrific. I appreciate that that line of reasoning. I understand where you'd stop yourself out if you shorted it. Question, is it a buy right here, expecting it blows past that 325 area?
Yeah, you could certainly buy it here because there are three things that you could do to buy it. One, first of all, you're not giving up a lot. The low was at 29.5. You could put your stop probably at 30.5, so you're risking at the very most $1.50, which is 3%. So yeah, I would certainly, there's no reason not to buy it. I mean, it's in an uptrend on a shorter basis. It's above the 78% level and doesn't look bearish, that's for sure. I'd rather be long than short.
Well, thank you so much on that. I'll reveal the mystery. This chart is 6 years worth of weekly bars on the yield, the interest rate on the 30-year U.S. Treasury bond. Mm-hmm. So buying that instrument here right now, as you describe, is the exact idea of shorting the ZBM contract right here, right now. So terrific. I appreciate that walkthrough. That's terrific. Helps me out.
John, I love you, buddy. Thanks a lot. I'm glad it was something that I'm short because I was afraid. But anyway, the bonds and notes look very. In fact, I'll post that while we're charting here. I'll just bring it up here because we stopped right at this 61% retracement yesterday in this bonds, right at this 142.19. We got up to 143 and change. But gee, this chart is so bearish longer term, John. I just don't see how interest rates are going to drop from this level. These charts are just extremely bearish. And, the problem is it has nothing to do with fundamentals. These are just little scratches on a piece of paper called bar charts. So it sure looks bearish to me. That's all I can say.
Very good, Larry. Just trying to help. Thanks so much.
Hey, thank you very much. I really appreciate it, John. Thanks for calling in, my friend.